Hello class, this is a video lecture of Chapter 8 of the Business Mathematics text, and Chapter 8 is titled Trade and Cash Discounts. Learning outcomes for the first part of the chapter are to find the trade discount using a single trade discount rate and the net price using the trade discount, and find the net price using the complement of the single trade discount rate. Some key terms, suggested retail price, catalog price, and list price. I'm sure you all are familiar with or have heard of MSRP. That's manufacturer suggested retail price. These are three common terms for the price at which the manufacturer suggests an item be sold to the consumer. The trade discount is the amount of discount that the wholesaler or retailer receives off the list price, or the difference between the list price and the net price. The net price is the price the manufacturer or retailer pays, or the list price minus the trade discount, and usually we don't know what the net price is. The discount rate is a percent of the list price. Find trade discount using a single trade discount rate, and find net price using the trade discount. List prices and discounts apply the percentage formula. The portion is the trade discount T, the rate is the single trade discount, or R, and the base is the list price, L. So here are just some variables so we can have a better understanding of the formula. So we have here the trade discount, which is equal to the single trade discount rate and the base price. Okay, and then we have also the reverse. We have the discount rate and base as the portion, which is illustrated here. The portion or the part equals the rate, which is the percent, times the base. Identify the single discount rate and the list price. Multiply the list price by the single discount rate. So we have trade discount, which equals the rate times the list price. And here's an example of this. Find the trade discount for a CD player that retails at $120 and has a trade discount rate of $35. So here we know that the trade discount rate is 35%. So as you recall from previous chapters, if we pretend that a decimal is right here, you move it 2 units to the left, and then that's the factor which we use in the calculator to discount by 35%, and then times $120, which is the price here, the retail price. So then the trade discount is $42. So what does the $42 mean? That the wholesaler or the retailer will not pay $42 of the $120 list price. Another example, find the trade discount for a rug that lists for $290 and has a trade discount of 30%. And when you work it out, it's $87. Another example, find the trade discount for styling gel that lists for $18 and has a trade discount of 15. And if you work that out, it comes out to be $2.70. Using the trade discount. Identify the list price and the trade discount. Subtract the trade discount from the list price. Trade discount equals the rate. These are some pretty good formulas that you should know and take note of specifically for the quiz on this chapter. The trade discount equals the rate times the list price. The net price equals the list price minus the trade discount. So here's an example. Find the net price. So we're looking for net price, so we know that this is what we're going to be using here. Of a desk that lists for $320 and has a trade discount of 30%. So we know we're going to have to be doing the $320 minus the trade discount of 30%. And the way that we do it is we have to take the 30% and then make it into a decimal, multiply that by 320, and that gives us $96. Net price equals list price minus the trade discount, which is up here. So the net price is the $320 minus $96, which is the trade discount, see? And that equals 224. Another method for calculating the net price uses the complement of a percent. The complement of a percent is the difference between 100% and the given percent. The complement of the single trade discount rate can be used to find the net price. Subtract the single trade discount from 100%. Multiply the list price by the complement of the single trade discount. So here's an example to illustrate. Find the net price of a coffee maker that lists for $20 and has a trade discount rate of 20%. 80% is the complement of 20% because 80 and 20 equals 100. So 80% is the complement of 20%. So the NP, or the net price, equals $20 times 80%, which is illustrated here as a decimal, and that equals $16. And that's how you find the net price. Another key term, complement of percent, the difference between 100% and the given percent. So an example of the complement of 30% is 70%, the complement of 55% is 45%, the complement of 5% is 95%, and as you can imagine, the complement of 1% is 99%, of 2% is 98%. So it's basically what you need to add to that percent to equal 100%. So here we have list price listed as 100%, the discount or the amount off the list, and then the net price. So if the list price is 100%, discount is 25%, the net price or the amount paid is 75% of the list price. Here's some examples. Find the net price of a set of golf clubs that lists for $1,500 and has a trade discount of 15%. So here we're looking for net price. And it lists for $1,500 and the trade discount is 15%. That equals 1,275. Another example, find the net price of a bicycle that lists for $102 and has a trade discount of 30%. So again, we're looking for net price. The list is 102 and the trade discount is 30%. And when you work that out, it is $71.40. Learning outcomes for section 8-2. Find the net price applying a trade discount series and using the net decimal equivalent. Find the trade discount applying a trade discount series and using the single discount equivalent. Key terms for this section, trade discount series or chain discount, and these are just additional discounts that are deducted one after another from the list price. And some reasons for using the discount series include to encourage volume purchases, so for you to purchase more items. This is an example of this is when you go to Costco and you buy in bulk. To promote special or seasonal items like Easter specials or Thanksgiving specials. Black Friday is a great example of this. Or to entice a new client. One way to calculate the net price is to make a series of calculations. So here we have some examples. We have $400 times 20%, which equals $80. 400 minus 80 is 320. The first discount is taken on the list of 400, which leaves $320 towards the end. So then we take that further. 320 and 10% of that is $32. So then we have here 320 minus the $32 is $288. The second discount is taken on 320, which leaves 288. So then this is taken again, placed here, and then 5% is taken from it, and 5% of 288 is $14.40. 288 minus $14.40 is $273.60. So a third discount is taken on 288, which leaves the net price of $273.60. Complements are used to find the net prices directly, which is a faster method. So suppose an item lists for $400 and has a discount of 20%. We take the 20%, we figure that the 20% of 400 equals $80. So then we do $400 minus $80, which equals 320. If we take an additional discount of 10%, an additional discount of 10% is taken on the previous price. So here we do it again. We bring down the 320 times 0.1 for 10%, which gives us $32. 320 minus $32 gives us 288. So I guess it'll bring this down again. An additional discount price of 5% is taken on the previous price, so we calculate that 5% of 288 is $14.40. Subtracted from $288 gives us $273.60. So $273.60 is the final price. Can you add the discounts together and apply it as one? If the item has three discounts of 20%, 10%, and 35%, can you add them together and apply a 35% discount? No. Each time you apply the additional discount, the base becomes smaller. Directly applying a 35% discount will result in a final price of $260. And there's also some statistical implications of why it doesn't work out. So suppose you have $100 and you want to calculate what a 25% discount would be. It's obviously $75. But adding 25% to $75 doesn't give you the 100% again. And then this is an example of what in the field of statistics is called prosecutor's fallacy, but it's not something that will be covered in this class. But all you need to know is just that in the calculation of chain discounts, you can't just add the percentage and then just take that off the main price. So if you did apply a 35% discount by adding 20, 10, and 5%, you would actually result in a final price of $260, not $273.60. How to find the net decimal equivalent? Multiply the decimal form of the complement of each trade discount rate in a series. Multiply the list price by the net decimal equivalent. So as an example, find the net price of an order with a list price of $800 and a trade discount series of 20, 10, and 5. These are percentages, 20%, 10%, and 5%. Find the complement of each of the trade discount rates. They are 80% because 80 plus 20 is 100, 90% because 90 plus 10 is 100, and then 95% because 95 plus 5 equals 100. And then multiply them together. The net decimal equivalent is 0.684, and that's when you the net decimal equivalent of these when multiplied together. Apply the net decimal equivalent to the list price. So then here you have the net decimal equivalent times the list price, which gives you $547.20 as the net price. And here's an example of this. A tool set list for $325 and has a trade discount series of 20%, 10%, and then 10%. Find the net price. So remember, it's not as easy as just applying as adding these three and then taking the discount off of here. You have to do it in the sequence. And when you work that out, you get $210.60. A dress shirt lists for $125 and has a trade discount series. Oh, went forward there. Has a trade discount series of 15%, 10%, and then 7.5%. Find the net price. And the net price is $88.45. Using the trade discount. Find the single discount equivalent by subtracting the net decimal equivalent from 1. Multiply the list price by the single discount equivalent. So here we have another variable TD, which equals a single discount equivalent times the list price. Use the single discount equivalent to calculate the trade discount on a $3,200 lawn tractor with a discount series of 30%, 20%, and 10%. So here's how you do it. Find the net decimal equivalent by multiplying the complements of each discount rate. So here we have 70, again because 70% plus 30% equals 100. 80% because 80% times plus 20% equals 100. And 90% because 90 plus 10% equals 100. So then we multiply the 0.70 times 0.80 times 0.90, which gives us 0.504. So now you subtract the net decimal equivalent, which is the 0.504, from 1 to find the single discount equivalent. Oh, so then it speeds up, but it was 49.6%. The single discount equivalent is 0.496. Apply it to the price of 3,200. So the trade discount is 3,200, and pardon the red there, 3,200 times the single discount equivalent, which is 0.496, equals 1,587.20. So the trade discount on the tractor is 1,587.20. So that's the amount that you do not pay. Another key term, single discount equivalent, is the complement of the net decimal equivalent. It is the decimal equivalent of a single discount rate that is equal to the series of discount rates. Total amount of a series of discounts is a single discount equivalent by the list times the list price. The net amount you pay is the net decimal equivalent times the list price. Learning outcomes for section 8-3. Find the cash discount and the net amount using ordinary dating terms. Interpret and apply EOM and ROG terms, which we'll get to in a minute. Find the amount credited and outstanding balance from partial payments and interpret freight terms. Find the cash discount and the net amount using ordinary dating terms, and not the type of dating that you do outside of business mathematics. Different type of dating. Bills are often due within 30 days from the date of the invoice. To encourage prompt payment, companies offer an incentive or a cash discount if the invoice is paid within a specified period. So 20/10 or N/30 means take a 2% cash discount if paid within 10 days, pay the net price if paid within 30 days. Find the cash discount. Find the cash discount for an invoice dated December 1st for 1,500 with terms of 2 over 10 and over 30. And these aren't really fractions; they're just like shorthand. So don't get that confused. So then essentially what this is telling you is if the invoice is paid on December 9th, for example, the payment would include a discount and the amount would be 1,470. If the invoice is paid on or after December 11th, which is after the 10th, the amount to pay would be this one, 1,500. Some examples. Annie's Plants has received an invoice for $450 for potting soil dated November 3rd with the terms 5 over 10, n over 30. If the invoice is paid on November 12th, remember November 3rd, if the invoice is paid on November 12th, how much would Annie pay? $427.50. What if the bill is paid on November 30th? They would not be able to take the discount and would have to pay the full amount of $450 because the terms exceed the day. Find the cash discount. To calculate the exact number of days for a cash discount, you must know how many days are in each month. So if you're not sure, learn them. Using a chart is usually the most reliable. An invoice of $500, which reads 210 and 30, tells you that a discount of 2% is available if the payment is made within 10 days. So percentage, discount within 10 days, no discount within 30 days, or after the 10th day. Okay. To calculate the net amount directly, use the complement of the discount. So in this case, it's 0.98, and multiply it by the total amount. So to elaborate, we have 500, which is the invoice amount. Then we have 98%, which is the complement of the discount, because the discount is 2%. And to get to 100%, we need 98% plus 2%, so that's the complement. And then that equals $490, and that gives you the net amount to be paid insofar as you are able to pay it within the 10 days in order to get that 2% discount. Here's another example. Sycamore Enterprises received a $1,248 bill for computer supplies dated September 20th with sales terms of 210, 115, and 30. So now this follows remember, this is the percentage, 2% discount if we receive within 10 days, 1% discount if received within 15, so the percentage declined, and then beyond that, if received by the 30th day, no discount at all. A 5% penalty is charged after 30 days, which could also happen. Find the amount due for the following dates: September 12th, September 15th, October 1st, and October 3rd. If they receive the payment by September 12th, the 2% discount is applicable. So the payment is going to be $1,223.04. If the payment is received by September 15th, the discount is just 1%. And in that case, what's owed is $1,235.52. If the payment is received by October 1st, there is no discount, so the full amount of $1,248 is due. And if you send the payment by October 3rd, there's a 5% penalty, so there's a 5% over that cost, and that equals $1,310.40. Interpret and apply EOM or end of month terms. An invoice might be 210 EOM, meaning that a 2% discount is allowed if the bill is paid during the first month or up until 10 days of the month after the month on the date of the invoice. If the invoice is dated November 19th, then the 2% discount is allowed up to and including December 10th. Some examples: an invoice dated March 4th with terms 315 EOM. A 3% discount would be applied until April 15th. Okay, remember percentage and then the date. August 25th invoice with terms of 510 EOM, which means that a 5% discount, remember this part, would be applied until September 10th. So August, September 10th. So this is more specific to the date. December 2nd with terms of 220 EOM. and that means you get a 2% discount until January 20th. EOM, end of month. Okay. End of month terms. An exception occurs when the invoice is dated on or after the 26th of the month. The discount will be applicable until the specified day of the month following the month of the invoice. So an invoice dated April 27th with terms of 310 EOM would be eligible for the discount if the bill is paid on or before June 10th. A cash discount is allowed when the bill is paid within the specified number of days from the receipt of goods, not from the date of the invoice. Multiply the invoice amount times the complement of the discount rate. So suppose sales terms dating 110 ROG, which is receipt of goods, means that a 1% discount is applicable 10 days after the goods are received, not when the invoice is dated. So a little differently from EOM. So here's an example. Judy's Fine Jewelry received an invoice for 50 silver charm bracelets for a total of $550. The invoice is dated April 1st. She received the bracelets on April 6th. If the terms are 310 ROG and the invoice is paid on April 11th, how much will she pay? So remember, you have to pull out of here the information that's necessary and isolate the ones that are not so important. And then when you work it out, you do get it for a discount at $533.50. Find the amount credited and outstanding balance from partial payments. A company sometimes cannot pay the full amount due in time to take advantage of a cash discount. Most sellers allow buyers to make a partial payment and still get a partial cash discount. In applying the percentage formula to find the amount credited, the rate is the complement of the discount rate, the percentage is the partial payment, and the amount credited is the base. So here we have the formula: base equals percentage over rate. A partial payment is a payment that does not equal the full amount of the invoice less any cash discount. A partial discount is a cash discount applied only to the amount of the partial payment. The amount credited is the sum of the partial payment and the partial discount. And the outstanding balance is the invoice amount minus the amount credited. So here's an example. If the Sems Corporation received a $875 invoice with terms of 310 and 30 and could not pay the full amount within 10 days, but chose to send in a $500 partial payment on day 5, what amount was credited to their account? So here we have the formula from the previous slide. B equals P over R, B being the amount credited, P being the partial payment, divided by R, which is the complement of the discount rate. So when you work it out, you have B equals 500, which is the amount sent, divided by the complement, which equals $515.46, and that's the amount credited. The balance would simply be the difference, so $875 minus $515.46 equals $359.54, and that's the balance owed. Interpreting freight terms. Manufacturers rely on a wide variety of carriers such as truck, rail, ship, planes, etc. The terms of freight shipment are indicated on a bill of lading. Freight payment terms are usually specified on the manufacturer's price list. So here we have a pretty good chart for you all to keep. The term FOB shipping, the buyer pays on receipt, and who doesn't pay is the seller. For freight collect, the buyer pays on receipt, seller doesn't pay. FOB destination, the seller pays when shipped, buyer doesn't pay. Freight paid is paid by the seller when shipped, the buyer doesn't pay. Prepay and add both pay. Seller pays when shipped, buyer pays when invoice payment, when the payment is invoiced, and then the seller gets reimbursed for shipping. So here the main, this is consistent with what was learned in the previous slides, that there is a differentiation when on when payment is due, on receipt or when shipped, a month from now, within a certain amount of days. So it's pretty consistent. A bill of lading is a shipping document that includes a description of the merchandise, the number of pieces, weight, name of the consignee, which is the sender, consignee, destination, and method of payment of freight charges. FOB stands for free on board shipping point. The buyer pays for shipping when the shipment is received. Freight collect. The buyer pays the shipping when the shipment is received. FOB destination is when the seller pays the shipping when the merchandise is shipped. Freight paid is when the seller pays the shipping when the merchandise is shipped. Prepay and add is when the seller pays the shipping when the merchandise is shipped, but the shipping costs are added to the invoice for the buyer to pay. And I know that was a mouthful, but if you refer to chapter 8 in your text, it does give a little bit better of an understanding, more in depth than what the slides cover of all those terminologies for freight. So here's an example. The home doctor received a shipment of hand tools with an invoice total of $800, including shipping, and sales terms of 310 and 30. The invoice is dated June 2nd, and the shipping costs are $125. Calculate the payment of the invoice if it is paid on June 10th. Remember that cash discounts do not apply to shipping costs. So the first thing you want to do is subtract the shipping charges. We know what the shipping charges are. It's $125. You want to take that from the total amount. 800 minus 125 equals $675. So now you apply the discount. $675 times 97%, because we're getting a 3% discount. So this is what you're going to be paying, and that equals $654.75. So now you add the shipping charges back in. So now you have $654.75, which is the discounted total price you're going to get, plus 125 equals $779.75, which is the amount to be paid. And this concludes the 8th chapter of the Business Mathematics text. As always, any questions, comments, or concerns, please feel free to email me and I'll be more than happy to assist. Thanks and have a great day.